Begin.
Let's start then.
Yes.
All right. Good afternoon, everyone. Good afternoon on a wonderful rainy Monday afternoon over here. On behalf of All India Rubber Industries Association and AIRIA Eastern Region, it gives me immense pleasure to welcome all of you for the technical awareness session as part of AIRIA's efforts to disseminate knowledge on GST departmental audit readiness and burning issues for the rubber industry. A very warm welcome to all our members joining us from different parts of the country. I must begin by congratulating all of you. The very fact that you've chosen to spend your Monday afternoon attending a GST session instead of pretending to clear your mail backlog says a lot about your commitment or compliance. Or perhaps you've already experienced a GST notice and decided never again. So, but more on a serious note, GST has been evolving for the last few years, and we are about to have a GST Council meet very soon in Calcutta as well, hopefully. Uh, so, departmental audits are becoming more data driven, notices are becoming more sophisticated, and businesses are expected to have every invoice, every reconciliation, and every compliance record at their fingertips. In the rubber industry, where we deal with manufacturing complexities, job work, exports, input tax credits, and multiple product classifications, being technically prepared is not optional, it has become a necessity. I encourage everyone, therefore, today to participate actively. Please note down your questions as we go along. Don't worry, there are no marks for asking questions. The only people who get marked here are those who receive GST notices. And that's it. We are very fortunate to have with us a highly eminent speaker who combines technical excellence with practical industry experience and is one of the very highly renowned names in the Calcutta tax circles, in the Calcutta legal circles. The name of the firm is R.Tulsian and Co. LLP, and our speaker today, CA Ishan Tulsian, is a partner there. He's a multinational chartered accountancy firm with a legacy spanning over 6 decades and offices across India, Bhutan, the USA, Qatar, Oman, and Saudi Arabia. With more than 15 years of professional experience, our speaker, CA Ishan Tulsian, specializes in GST advisory and litigation, audit and assurance, valuation, and international taxation. He heads several important practice divisions within the firm, including GST, valuation, USA taxation, Bhutan taxation, and audit, among others. His credentials, ladies and gentlemen, are exceptional. He's a fellow chartered accountant, a company secretary, LLB, enrolled agent in USA, registered valuer under IBBI, holds a diploma in international taxation, secured All India Rank 2 in DISA, and has a master's in applied finance from Singapore Management University. Frankly, after reading his qualifications, I wondered whether there was any exam that he hadn't cleared yet. Ishanji. Now, apart from that, he also serves as a National Managing Committee member of FIO and co chairman of the Indirect Taxation and GST Subcommittee of the Bharat Chamber of Commerce, actively contributing to policy discussions and initiatives of the industry. He's also a renowned faculty member and speaker, having delivered more than 100 professional seminars and training programs for institutions including ICAI, NACIN, FIEO, FIO, EEPC, Bharat Chamber of Commerce, and others. I'm sure today's session under your tutelage, Ishanji, would be immensely valuable. I'm looking really forward to today's session. It will be practical, insightful, and with a lot of learning for all of us who are there. So, ladies and gentlemen, please join me in giving a very warm AIRIA welcome to CA Ishan Tulsian. So, the virtual floor is all yours. Thank you.
Thank you, Vishalji. Wow, I'm not used to hearing so much about me. Thank you for such a generous introduction. Thank you for your generosity, and thank you all the participants. As Vishalji mentioned, today being a Monday afternoon, and all of us with such encouraging participation from the All India Rubber Industry Association from across India. I welcome each one of you for having taken out time time to upskill and to absorb knowledge, to learn, to ask questions, to have a very insightful and interactive session. I would like to mention that you can put in your questions whenever it comes to your mind. You can note it down. We'll have a dedicated question and answer session towards the end of the session, say the last 15-20 minutes, and we can take it then, so that the flow of the presentation is not disturbed. You can note that down, or you can punch it in the chat box, and then we'll take it up in the end, right? So I'll just share my screen and the presentation. Just a moment, please. Kindly please confirm if my presentation is visible.
Yes, it is visible.
Yes, it's visible, sir.
Just yes. Okay, so let's the readiness to the rubber industry.
This meeting is
So
being recorded.
what have we assembled here today for? So see, today we are in the month of July right now, right? July 2026. So right now we have already into the tax audit under Income Tax Act. We have already the time period for 2025-26 that has elapsed, but we can still make our amendments, changes, rectifications, omissions. All of those rectifications we can make for 25-26 up to 30th of November 2026. We are aware of that, right? So we are placed in a very sandwich place right now, wherein in the next few months we are going to come across filing the October GSTR 3B return of 2026. That the if filed within 30th of November, with we have the last opportunity to make good all those errors and omissions as I mentioned for 2025-26. Our tax audit is going on. Internal audit reports would have been submitted. We are in 2026-27 financial year, so every return is important from the perspective of rectification of any error or omission in respect to our output tax liability or input tax credit for 25-26. So currently we will be filing our June GSTR 3B return, right? So that can also be an important return in case if we are able to identify the errors and the omissions, right, pertaining to 25-26. So we still have time. So we are going to I have compiled a very exhaustive presentation of more than 200 slides. We may not be able to cover all the slides, but the presentation is yours, the PPT. I will share it with the team, so the same can be shared with you. We will try to cover as much as we can today, and then we will take question and answers later, right? So without further ado, let us move ahead. So see, what are we seeing today? We as chartered accountants or financial experts or maybe the owners today of our company, my voice is audible, right? I can proceed. I believe my voice is audible,
Yes,
right?
yes,
Yes, sir.
Okay.
yes, it is audible.
Okay, so as financial managers, as business owners today, in the month of July, what are we going to check in our books of accounts for 25-26? How are we going to prepare our books of accounts? Even the earlier years, 2022-23, we are aware that GST departmental audit, the notices are coming right and left, right? 2023-24. Audit notices have also started coming in, right? 2024-25 audit notices would come in under section 65. So we need to, this presentation is applicable, all the points mentioned in here, they are applicable for all the earlier years as well as 25-26, the immediately previous year as well as the ensuing financial year 26-27, right? So, year-end review for 25-26, what do we see? From the outward supplies perspective, from inward supplies perspective, and from RCM. Now, see, let us start with the outward reconciliation focus areas. As business owners from the rubber industry, we we start with the outward supplies reconciliation. So what are the areas, focus areas where we need to concentrate and see where can the mismatches be, where can the miscompliances be. So let us see the first focus area, that is our output tax liability or outward supplies or the sales which have been reported in our audited books of accounts versus what is there in our GSTR 3B, what is there versus our GSTR 1. So if you were to see all businesses, we have something called a reconciliation statement. If you see this particular reconciliation statement, what do we have? We have taxable value. This is a month-wise reconciliation statement of outward supplies and output tax liability, which we have reported in our GSTR 3B return for financial year 2000, for example 24-25. This can be 25-26 as well, as per our books of accounts as well as what we have reported in our GSTR 1. So if there is any mismatch between your output tax liability between GSTR 3B and in GSTR 1, we are aware there is an automated notice which comes in the form of DRC 01B. We must have also seen those are automated, right? So in case if we have reported, for example, if you were to see in this example, there is 305.45 of CGST and SGST. This is in minus. What does this mean? This means that we have short paid this particular amount in our GSTR 3B, for example, for our financial year 24-25. So there will be a system generated automated your DRC 01B notice, which will come, wherein they would mention that, sir, within the next 7 days, kindly make good of this payment along with the applicable interest. Or what can come? An ASMT 10 or scrutiny of GST returns. A notice in ASMT 10 can come. Right? We have all seen ASMT 10 notices. Those are notices wherein if there is any arithmetical differences in our output tax liability, outward supplies, which is the sales side, or the input tax credit, which we have claimed in our GSTR 3B return versus what is available in our GSTR 2B return. And there are other arithmetical differences, RCM also, right? So those are your ASMT 10 scrutiny notices under section 61. So it is also very important to know there is no time limit. There is no time limit for the recovery of this 305 rupees each of CGST and SGST when it is in default, when you have not paid this payment in GSTR 3B, which you are supposed to pay, and which you have declared in your GSTR 1. So there is no time limit for that. Okay, that is section 73, subsection 11, if you were to see, and section 75. There is no time limit for that. So it is very important that we do these reconciliations. If we have not done, in the month of March 2026, it is the right time to do so now, because the tax audits are on, and in the next few months we are going to file our final return for any amendment, for any rectification for 25-26, which is our October 2026 GSTR 1 and GSTR 3B return, which is the last chance for us to rectify or make good any error for 25-26, right? So kindly make these these reconciliation statements. Let us see the other focus area. This we may have come across several times, that is e-way bill reconciliation. What is e-way bill reconciliation? See, this is again which I was talking, this is an attachment to an ASMT 10 for a client of ours. We have taken screenshots and we have made additions of real life notices so that we can give good practical perspective to these issues. As business owners of rubber industry, we need to reconcile not just the output tax liability and outward supplies as per our GSTR 1, 3B and our books of accounts, but we also need to do reconciliation of the output tax liability and the outward supplies which we have reported in our e-way bills, right, versus what we have reported in our GSTR 3B. If you were to see, this is a real life attachment to an ASMT 10 notice, which is a scrutiny notice. What does it say? This is given by the department to the business owner. It is comparing all the sales which you have reported everywhere. In your GSTR 1, for instance, you have reported this is the output tax liability, 35,32,294. What have you declared in GSTR 1? What have you declared in GSTR 9? What have you declared in GSTR 9C? They are going to take the highest amount. And they have also taken what you have reported in your e-way bill data. These are the output tax liability which you have reported while generating your way bill. When you have generated as an outward supply, not as an inward supply, right? We will see this. So if you were to see, as per e-way bill data, the department says the output tax liability as under your IGST means the amount which you are supposed to pay on the sales which you have made under IGST is 35,83,489. But how much of IGST have you declared and paid in your GSTR 3B return for the entire year? As per the particular notice, it is 35,32,254. So there is a shortfall of 51,234 IGST tax under IGST in respect to your outward supplies, in respect to your output tax liability. Now, what are we going to do? The department is saying, sir, kindly make payment of this because you have short paid this in the form of your output tax liability. But we are not going to make that payment. We are going to submit a reply wherein we are going to submit a reconciliation statement between the output tax liability which we have reported, which is available as per the way bill data which we have generated as business owners for our outward supplies. So this is available. We can download this from the e-way bill portal also, right? And we are going to do a reconciliation and try to match the particular output tax liability what we have made the payment in our GSTR 3B for the entire year for that financial year. So if you were to see, there are certain transactions wherein no e-way bill is required, but that is a part of your GST turnover, which is if you are making any service sale, is there any way bill required? No. Because services are intangible. You're not transferring or you're not moving any goods, tangible goods from place A to B. So you don't need any e-way bill for that. So this particular amount, if you were to see outward supplies, but which are supplies exempt from e-way bill generation requirements, right? So here, if you were to see, these are service supplies. So 6,909 worth of output tax under IGST. Is this added in your e-way bill output tax? No, but this is added in your GSTR 3B. You made payment of this output tax liability because you made service sales. So you are going to add this amount 6,909 to the output tax liability under IGST, which is being shown from your e-way bill record, right? So we are going to reach from year to year 35,83,489. We need to reach to 35,32,284. Similarly, there are certain transactions wherein no way bill is required, but because they are below the threshold limit, such as in Maharashtra, if you were to see the intrastate, the threshold limit for outward supplies for generation of e-way bill, that is 1 lakh. In West Bengal, it was 1 lakh before 1st of June 2026. But in Maharashtra, I believe it is still 1 lakh. So any invoice value worth less than 1 lakh, and if you are transferring goods from your factory to your customer, do you need to generate an e-way bill? No, you don't need to generate. So this particular amount, 1,10,000 of CGST and SGST, it forms a part of your GSTR 3B because you've already made the payment, but it does not form a part of your way bill. So you're going to add. Similarly, for interstate, the threshold is 50,000. So these transactions are those transactions wherein these are below the threshold. You don't need to generate e-way bill. Similarly, for credit notes, we are going to reduce because when the original invoices, they were below the threshold limit, if we are going to have material return, so there will not be any e-way bills generated on credit notes for intrastate transactions below the 1 lakh threshold. So, but we have factored this reduction in output tax liability in our GSTR 3B. This is reduced, but the same is not factored in here in our e-way bill. So we are going to adjust these. So making these adjustments, we are going to reach here. So there is not a single penny which we had to pay for our client once we do this reconciliation. So I request for all the businesses today kindly make a reconciliation statement of your output tax liability, which is appearing as per your e-way bill portal as an outward supplies, right? As you are making outward supplies versus what you have declared in your GSTR 3B. There are also instances wherein your customer, your consignee has generated that e-way bill, but you have not generated that e-way bill. So that particular sale amount or that particular output tax liability will not form a part of your way bill data, because your consignee or your transporter, they have generated that particular e-way bill, but that particular sale or output tax liability will form a part of your GSTR 3B. So this is a very important reconciliation. Now let's come to e-invoice reconciliation. Why is this important? E-invoice reconciliation, can anyone tell me which businesses need to generate e-invoice? As business owners of rubber industry, if I have a total turnover, annual aggregate turnover of more than 5 crores, in any of the preceding financial years from 2017-18 to 2025-26, in the last 9 years, if in any of the years, if my annual aggregate turnover AATO exceeds 5 CR, then I need to start generating e-invoices today. This is extremely important. Why? Because if we do not generate e-invoices, there is a penalty of 100% of the tax which is mentioned in your tax invoice, your sale invoice, or 10,000, whichever is higher per invoice. So for example, if you are selling, if you are making sale of 10 lakh rupees, right, and if you are moving the goods, and at that point in time, if you know that your annual aggregate turnover is more than 5 crores in any of the preceding financial year, so you need to generate a particular e-invoice. If you do not generate e-invoice, your 18%, for example, 1,80,000 rupees of output tax liability, you need to pay as penalty. 100% of the tax amount, or 10,000, whichever is higher. So this is an extremely important, this particular reconciliation which you need to make. And moreover, if you were not to create an e-invoice when you need to, the buyer or the recipient of the supply, he will not be entitled to get the input tax credit on his purchase. So it's extremely important. Now there is one more point which we need to understand and which we need to check as business owners of the rubber industry today. That have we generated these e-invoices if our annual aggregate turnover is more than 10 crores in the preceding financial year? So have I generated the IRN, which is the invoice reference number, or the QR code? Means, have I generated the e-invoice within 30 days from the date of the invoice? Have I done so or not? If I have not, then you will not be able to generate the IRN, which is the invoice reference number, and the QR code, 64 character IRN. So this means e-invoice, the time limit to generate the e-invoice is only 30 days for all those business owners who have an annual aggregate turnover of more than 10 crore. This annual aggregate turnover also includes exempt supplies, export supplies, domestic supplies, right? So this is very important for us to reconcile. If we are to see our GSTR 1 today of 25-26, you were to see all these IRNs. These are 64 character IRN, which is unique to every particular sale transaction. This will appear, and if it does not appear, if you have not generated, kindly do so at the earliest. Now, what is the next reconciliation? The next reconciliation is reconciliation, as we are aware that the GST portal and all the data on the GST portal in terms of your input tax credit, your sale, output tax liability, it is not just appearing or available in the GST portal. It is there integrated with the income tax portal as well. It is integrated with your IceGate portal also. It is integrated with your e-way bill portal also. It is integrated with your e-invoice portal also, right? So what do we need to reconcile? Today we need to open our AIS, TIS, Form 26AS. Primarily, if we open our annual information statement, we know what is AIS, right? This contains all the TDS and TCS credits under Income Tax Act from the perspective of our business, right? And all those credits we use to set off against our income tax liability. So in our AIS annual information statement, you were to see there is also a portion or an extract which is dedicated towards your GST details. So for your financial year 25-26, you should see what is the total turnover which is being shared, the details being shared from your GSTR 3B, from your GST portal to your income tax portal. And this should match with your total turnover which you have reported in your GSTR 3B, GSTR 1 audited books of accounts. Also currently, right now, if you were to go to your GST portal, you are to see you still have an option to update your annual turnover for financial year 25-26 as annual turnover, annual adjusted turnover. You still have an option. This window is open up to 31st of July. It is open from 1st of July to 31st of July. So you still have a chance to update in case if you have made an error and if your annual aggregate turnover for your financial year 25-26 it does not match with your books or GSTR 1 3B and you know the correct turnover, you still have a time to rectify it in your GSTR 1 return, GSTR 3B returns of any of the returns up to 30th of November 2026. We already are aware of that. Secondly, we need to also reconcile our total turnover which is appearing in our income tax portal through AIS, TIS 26 years. In 26 years nowadays, they do not show the turnover details. In fact, inward supplies, input tax credit, the amount which you have claimed or appearing in your GSTR 2B, that is also auto-populated now in your AIS statement. So it is very important that you reconcile this. And the data comes from GSTR 3B, not GSTR 1, which is appearing in your AIS statement. So if you were to see, it is 5,32,57,491. The same amount is appearing in my GSTR 3B. Fine, it is reconciling. Now let us come to the next one. It is GSTR 1 versus GSTR 7 versus GSTR 3B. This reconciliation, what is GSTR 7? Can anyone tell me? What is GSTR 7? So we will share the presentation, not to worry about that. Let us concentrate now. We will take the questions also later, but let us concentrate right now on the particular presentation. We'll share the presentation with you. It's a very detailed presentation, not to worry. So GSTR 1 versus GSTR 7 versus GSTR 3B. If you were to see this particular reconciliation, what is GSTR 7? As business owners and taxpayers of the rubber industry today in the month of July 2026, what do we have to see for 2025-26 and even for the ensuing financial year 26-27? If we are government contractors and if we are selling rubber or rubber products to the government, who is the government? Central government, state government, even any unit in which central government or state government or a combination has more than 51% stake, or PSUs. If you are selling them, if you are a government contractor, if you are selling them or selling them any products, so what is section 51 of CGST Act? Section 51 says that when they are making payment to you for the sale which you have made, they are going to deduct 2% TDS on the taxable value. If your taxable value, for example, today you sell tire to the government department, right, or hose or pipes or some rubber product, and your contract value is more than 2.5 lakh rupees taxable value. So what happens if your contract value is 5 lakh rupees? So the tire or the pipe worth is 5 lakh plus 18% GST. So 5 lakh plus 90,000, your invoice value is 5 lakh 90,000. So your taxable value, is it more than 2 lakh 50,000? Yes. So now when the government makes payment to you of 5 lakh 90,000, will it make the entire payment of 5 lakh 90,000? No. It will make payment of how much? 98% of 5 lakh. It will deduct 2%, means it will make payment of 4 lakh 90,000 worth of your taxable value plus 90,000 of your GST. So it will transfer 5 lakh 80,000 to you, not 5 lakh 90,000. So this 10,000 which is retained by the government, it is filed in when the government department files its GSTR 7 by the 10th of the next month. And this particular 10,000, it comes to you as a GST credit, wherein you go to your portal and you see here and you accept this particular 10,000 TDS credit. Once you accept it, then a GSTR 7A TDS certificate is automatically generated. So this 10,000 rupees here, where will it go? It will go directly to your electronic cash ledger statement, right? So as business owners today, what do we need to see? If we are government contractors or we have any sale portion made to the government, we need to ensure that when the government files its GSTR 7, when the TDS credits come to us, when do we accept it? We need to accept it if we have accepted the TDS credit pertaining to any sale of tires made to the government of 25-26 only. We will accept it, for example, in 25-26, the TDS credit of 10,000 on the GST portal. So in 25-26 only, that 10,000 will come to our electronic cash ledger. What do we need to see? We need to check that this particular sale which we have made to the government, for which 2% of the taxable value which is reflecting in my electronic cash ledger, whether the consequent sale means this 5 lakh rupees, have I reported it in my GSTR 1 and 3B of 25-26, yes or no? If I have done so, very well, good. So all your government supply sales, you need to check today that all the TDS credits have come. Have you accepted all of those? Have you generated all of those TDS credit, TDS certificates by accepting it on the GST portal? Are the GSTN of the deductor, is it correct? Have you made sale to, for example, Pune, Parivahan Center? You sold tires there, but Maharashtra Parivahan Center of some other GSTN, they deduct your TDS and file in their GSTR 7. Is it valid? No. So you need to also reconcile. This particular GSTN of the deductor means the which government department whom you've sold should be the same GSTN on the TDS credit, the person who's deducting. Many times there is a lot of confusion from the the department, the government department. You have made sale to one government department, some other government department has deducted TDS and they filed and deposited 2% TDS on GST from their GSTN, which is incorrect. So you need to check all of these things. In case if you forgot to accept, I see many clients and many business owners, they don't even know that they have to accept this particular TDS credit on their GST portal. So for any sale of 24-25, for instance, if you have not accepted still, or for example of 25-26, till date you have not accepted what the TDS credit on the GST portal of 2% in 26-27, kindly do so. If you are going to accept it in 26-27, no problem. That 2% will come in your electronic cash ledger in 26-27. But when the GST audit happens, the departmental officer will say, sir, where is the sale of this government supply? You have accepted this in 26-27. You will say, sir, no, this sale is not pertaining to 26-27. This is pertaining to 25-26. And then you will have to show them that, sir, this 5 lakh rupees of sale of tire to the government department is of 20 of the previous year, 25-26, but I've accepted it in 26-27, right? So these reconciliations are extremely important. Goods in transit. Now, tell me one thing, this is a real life extract of a particular audit observation from a client of ours, a large client, a turnover of more than 500 crores and all. What does it say? This is a real life audit observation pointed out by the GST departmental audit team under section 65. What is it saying? They are saying that, sir, we feel that the goods, for example, let us see this here. What is happening? All these are your purchase invoices. All these are your purchase invoices. What are the dates of your purchase invoices of your tire? If you're purchasing tire or rubber, and if you are processing it and then you are selling it, or even as a trader, your purchase invoices in the last week of any month, you need to ensure that the goods have entered your principal place of business or additional place of business in that month itself. For example, this particular invoice, your purchase invoice of rubber, is dated 24th of May 2022. If this particular good actually enters your principal place of business, godown, factory, warehouse, wherever, when it reaches on 4th of June 2022. So, can you claim this input tax credit? Can you claim this particular input tax credit of 74,520 in the month of May or in the month of June? Can anyone respond in the chat box? My question is, if this particular invoice, purchase invoice, if my goods actually are received in the month of June 2022, do I claim the input of 74,520 of my rubber purchase in the month of May or in the month of June? Can anyone respond in the chat box? If I've received the goods, June input because receipt. Very good, Arul Polymer. Very good, Kamani October LLP. Very good, Bijalji. So what does it say? As per section 16, subsection 2, clause B, one of the conditions to claim input tax credit. What does it say? Whenever the goods are received in whichever month, we should claim the input tax credit in that month. So now what is happening if we don't have sufficient records? What records? If we don't have sufficient records of our e-way bill, or if we do not, nowadays we even have the facility from the 1st of August, we will have the facility of closure of e-way bill. This is a new amendment which has come. You have the facility to close your e-way bill also. In case if your goods have been received on 28th of, for example, 28th of July 2026, you've received your purchase invoice was dated 24th of July 2026, and your e-way bill expiry for instance is on 4th of August 2026. You have an option today, in case if you have received your rubber products, your raw material, your goods on the 28th of July 2026 in your factory, from the 1st of August onwards, let us see, 1st of August onwards, you have the facility to close your e-way bill. So what is the importance of closing the e-way bill? After 1st of August, when you log in your e-way bill portal, there will be an option below e-way bill for gold. You will have an option of closure of e-way bill. So this will prove to the departmental officer that you have received the goods. That's why you're closing. Closing and cancellation is different. We cancel the e-way bill within a particular duration, right? But this is e-way bill closure, that you have received the goods and you closed it. When can you do so? You can close your e-way bill the day you have received the goods or the succeeding day, the next day, right? You can do that. Means you can do so when your e-way bill expiry is happening. For example, if your e-way bill expiry is happening on, for example, 4th of August 2026, you can close your particular your e-way bill, you can close on the 4th of August or on the 5th of August. If you have received the goods before that, you can do so, no problem, right? So now coming back to this particular notice, these are goods, these are all purchase invoices where the e-way bill is expiring in the next month. Kindly give me proof that these particular raw material of rubber products you have received in the month of May, because you have claimed the particular input tax credit on this purchase invoice in the month of May in your GSTR 3B. So kindly give me proof, because I can see in your e-way bill validity that the expiry is happening in the month of June. So you have not claimed the input in the month of June, you have claimed it in the month of May. So you have violated section 16 subsection 2 clause B. You have to pay interest of 18% per annum on 1 month of early claiming of input tax credit. Like that, now for you as business owners of rubber industry, you need to see all the month end purchase invoices. You need to have a cutoff date. For example, the last week of the month, all those particular purchase invoices which are appearing in your GSTR 2A, 2B books, you need to ensure the goods, if you have claimed the input in the same month, where the purchase invoice pertains, kindly ensure that the goods have been received, and you need to also have proof. What proof? You need to have consignment notes, lorry receipts, payment slips, good receipt note, stock register ledger. You need to have those entries. You need to have your entries in your busy tally SAP on that particular date. You need to have a stamp. The storekeeper or the gatekeeper, the guard, they need to stamp it, sign it. You need to take photo of the lorry or the vehicle when the particular lorry comes. And all these are required, because if you are unable to prove that your goods have been received in the same month where the purchase invoice pertains, you will have to either reverse the input tax credit or you will have to pay the interest. So it is very important, right? So kindly ensure that you have checked this, right? Or if not, if you have claimed the input tax credit 1 month early, so kindly pay suo moto by yourself, kindly pay interest of 1%. In case if you have utilized that particular input tax credit in that 1 month, if you have early availed the input tax credit of 90,000, for example, or 5 lakh, but if you have not utilized it, you have not made payment You've not set it off against any output tax liability. It is still available in your electronic credit ledger, even in the month of June, next month. You don't need to pay any interest also. So that is also a very good safeguard which you have. Right. Now, if you were to see, this is again one more audit point which many people from your industry they receive. They say that, sir, the truck is traveling from, for example, Maharashtra, some place, so for example, from Mumbai to Pune. But we have intelligence and evidence that it has not crossed a toll point to reach some area in Pune. So they are going to say that, sir, you have not received this good. So how can you claim input tax credit? You have violated section 16 subsection 2 clause B. So kindly give us evidence that you have received these goods. Now, what are the evidences which you should have? This is an attachment again of this, that where the department is saying, if you were to see that from place, where is it originating? The truck from Jharkhand. This is 8, pin code Jharkhand. Where is it ending? It's ending in 7, pin code means West Bengal. So the department is saying for all of these trucks, for all of these journeys, there we have evidence as per our intelligence, DJ Arm, Advait, or any other back-end intelligence, DGGI, we have that these trucks were either not existing, they don't have a certificate, these trucks, they have not crossed toll points. So kindly prove that you have received the goods, otherwise reverse input tax credit of 1,57,000 each of CGST, SGST, 19,22,000 of IGST. This 1 point, it cumulates to 20 lakh of just tax reversal, plus interest, plus penalty of 100%. So this 1 point can in itself tantamount to 30-40 lakh rupees of tax, interest and penalty. So it is very important that we have all of these documentation with us. What documentation should we have? We should have what? We should have vehicle logs. As I told you, we should have e-way bills. We should have weighbridge certificates, kata slips, which we say when we are going to, when the supplier loads the particular raw material or whatever you have purchased from his premises. So there he goes and he does a weighment of that. So you can ask for that particular weighbridge slip from your transporter or your supplier. If you have also weighed, these are very important documentation. Don't tear it. Freight payments, if you are making payment for the inward receipt of your raw material to the transporters, so you need to have proof of consignment notes, bill T, road challan, delivery challan, and bank statements where you made payment to these transporters to prove to the department that you have received these goods. Even the ledger copies, bank statements, and also what have you done with these particular, what have you done with this one, inventory reconciliation, what have you done with these purchases. What is happening here? Just a moment. I think there is some scratch here. Okay, never mind. You also, in case if you're a trader, rubber trader, so what do you need to do? When have the goods come reached us? What have we done? Whom have we sold it to? You also need to give the ledger copies and the entire trail from your purchase order PO till the receipt of money from the sale which you have made. You have to prove an entire trail from purchase to sale. So kindly ensure that for your 25, 26, 26, 27, kindly do not throw all of these records. These are very important. The next 3 years, 4 years, whenever a departmental audit happens, they will ask you if they have intelligence record that you have not received goods or the truck has not passed certain toll points. Right? I have also downloaded an RC certificate of vehicles which have been mentioned in those e-way bills or your e-invoices, and those fitness certificate, validity, insurance, that tonnage to prove that these vehicles existed as on the date of the particular transfer. Very important. Now, physical stock versus book stock. Now, just imagine, I would like to ask each one of you, how often do you update your purchases in your busy SAP, Zoho books, Tally, or your accounting software? Is it every day, or is it once a month, or is it once a week? Why I'm asking you this is that in case if the departmental officer, he carries an inspection notice in INS 01 If he gets any intelligence that for any reason that you are purchasing goods from some fake supplier, or your supplier has indulged in some fake transactions, and they have the right to enter, they get a particular INS 01 inspection warrant, and they come into your premise, one of the first things which they are going to do is a stock reconciliation. They will do a stock reconciliation of your rubber, what? Raw materials, your natural rubber, your other vulcanized, unvulcanized tires, your pipes, whatever your raw materials are, work in progress, all of those things which are available in your stores or on the production floor physically versus what you have recorded in your books of accounts. If you were to see this, this is a release letter. This is a release, release of goods wherein the department had seized, goods worth of 8 crores of a client of ours because he had massive mismatches between the raw materials, finished products, and the work in progress and consumables between his what was recorded as on the date of inspection, 18th of March, the date of inspection in his books of accounts, and what was physically found. Let us see this example. This is a finished good. Okay, so finished good to the extent of 51 units was found physically. But if you were to see, only 49 units of finished goods were passed or available in the tally or the books of accounts. So the department or the investigation team, the inspection team, they have the right to confiscate 2 units of your finished goods. They will say that, sir, these 2 units of finished goods are not recorded in your books of accounts, and these are available in your stock. So this means that you have done some, for example, you have purchased finished goods without the basis of any tax invoice. So they have the right under section 130 to confiscate your finished goods or raw materials which you have not recorded in your books but which are found in excess, or vice versa. If you have not passed production entry, here you have not passed production entry, for example, of 2 units which are not there in your books, so they have confiscated 2 units of your finished goods because they were found in excess physically. Vice versa, if you had passed the production entry premature, 51 had it been here, but they would have only found 49. So what they would have said? They would have said that, where are those 2 finished goods? So they would confiscate your raw materials instead. So what I am trying to say, at any point in time, kindly ensure every single day your purchase vouchers are taken into consideration. Raw materials, consumables, finished goods, production entries, journal vouchers, all of those are entered on an everyday, daily basis. In case not, then like this client of ours and several other people in the industry, there may be a mismatch. And when the departmental officer does the stock counting, they do it in a very unscientific manner, because the stock counting which we have, we may take a week to do so. They do it in 8 hours. So they do it on a basis of lot of justification and approximation, which is incorrect. So kindly ensure you do not come to that extent. Kindly keep your books of accounts updated. This also is mentioned in your section 56 also. There 5618 that you can have an electronic record also, all of those things. So kindly ensure the reconciliation between your physical stock and your book stock. Right now, advance adjusted and advance receipt and adjusted. Now here, many people till date, what do? Kindly please respond in the chat box. If I am selling tires made out of rubber, my finished product, before selling, this tire is worth 5 lakh rupees. So 18%, 5 lakh 90 is my invoice value. And out of that 5 lakh, I say, sir, please transfer 50% advance. So I received 2.5 lakh rupees plus GST when in the month of July. But I will make the sale. I will issue my e-way bill, I will issue the invoice, I will transfer the tire only in the month of August. So I have received advance against goods in the month of July 2026. Do I need to pay GST on this particular advance I have received from my customer for the provision of supply of goods? Kindly please respond in the chat box. Every day, very good. Very good, Gibraltar Air Spring, very good. As and when we get the invoice and material, very good. Kindly please respond. No, very good. Nana ji, very good. You do not need to make payment of GST on advance received against the supply of goods. Why? As per notification 66/2017 from 14th of November 2017, the GST element on advance received for supply of goods has been removed. Now, but very important point is, in case if you are doing trading services, retrading services, if you are doing recycling services, or if you are giving any maintenance services for which you are issuing a particular separate service invoice as a rubber industry business owner, and in case if you have received 50%, 20%, 25% advance against service, if you have received in the month of July, but you have not issued the invoice of the service, you have not given the provision, you have not given the service of this supply of service, that will happen in the month of August. So in that particular case, you have received 2,50,000, 50% of 5 lakh, for example, the taxable value of your service. You have received 2,50,000 plus 18% GST from your customer in the month of July. We need to report this to this 18% of 2,50,000. How much is it? For example, 45,000. So 45,000 of GST, which I have collected against the advance received for provision of supply of service, which I have not done yet, I need to report in table 11A in my GSTR1 as unadjusted advance against which the invoice has not been issued. And what will I do in our GSTR 3B for the month of July? I will report this particular 45,000 and taxable value 2.5 lakh rupees in my table 3.1A of GSTR 3B as a sale, right? The next month, when I issue the invoice of entire 5 lakh and 90,000 of my service of retrading or repair maintenance or whatever that is of rubber product. Now, do I report the entire 5 lakh again in my GSTR 1? Do I report that again in my GSTR 1? Yes or no? I do not report that. What do? I set off and adjust this 2.5 lakh taxable value 45,000 GST amount in table 11B. Why? Because I have issued the sale invoice of entire 5 lakh and output tax liability of 90,000 in the next month in August. So that particular sale invoice, entire 100% sale invoice, will be reported in my table 4A, which is normal B2B invoice. And the amount of advance which I had received in the last month, I will adjust that particular amount in table 11B. And in GSTR 3B, in table 3.1A, I am going to only report what? The remaining amount of my sale consideration, which is 2.5 lakh rupees and 45,000, the remaining 50% of my tax invoice in my table 3.1A. Many people, what they do, they report 5 lakh. Last month they reported sale of 2.5 lakh in table 3.1A in B2B. Next month they issue the invoice, they don't adjust in GSTR 1 and they report entire 5 lakh. So 7.5 lakh is the taxable value it becomes, and you have paid tax how much? 1,35,000, 90,000 plus 45. So you have paid double tax on the advance portion. That is one error which still businesses do. Second, the biggest error which businesses do, which GST department officers they catch, is in the month of July. Have you paid this tax on your advance in GSTR 3B table 3.1A? Have you reported the same in table 11A? No. 99% of businesses in all the industries, they are still not paying taxes on advances received against the provision of supply of service. They are still not paying or reporting. So what happens for that particular 1 month? For July, you should have paid tax on the advance. You did not. In August, you paid because you issued the invoice. But for that 1 month, you will have to pay interest at the rate of 18% per annum. This is very important. You should do reconciliation. And also you should report this. This is also reported. This is an extract of GSTR 9C of a client of ours, right? So unadjusted advances, it forms a part of, if I at the year end, unadjusted advances, we have already paid GST on that, we should, right? So it's a part of our GST turnover. But is it a part of our audited financial statement turnover? No, it's not sale, right? How is it sale on the top line? So we add this. Unadjusted advances at the end. So we add this to reach to the GST turnover, right? You can go through this. Also, we need to also ensure today that all our purchase invoices, the place of supply is correct. It's very important, sir. What we see in most of the cases, if in this particular case the supplier was in Tamil Nadu, he supplied pipes to our business in Pune, in Maharashtra. So what should be the place of supply? Place of supply should be Maharashtra, right? The state code should be that of Maharashtra. But in the invoice, everything is correct. In the invoice, if you were to see, it is written, for example, in this particular case, the goods were received in West Bengal from the supplier in Tamil Nadu. So, destination is West Bengal, state code is 19, everything is correct. IGST is charged, amount is correct. But what happened? When the supplier in Tamil Nadu, when he was filing his GSTR1, he put incorrectly place of supply as Karnataka. Now, this place of supply gets auto-populated in your GSTR 2B. And what does it show? It shows ITC ineligible. Why? Because place of supply outside the state of registration of the recipient. The recipient, I am there in West Bengal or in Maharashtra. So, the place of supply for all my purchase invoices showing in GSTR 2B, it should be the destination where the goods halt. It should be either Maharashtra in the example or West Bengal if I have received the goods in West Bengal. But by mistake in GSTR 1, the supplier has reported his place of supply as Karnataka. So in that case, what happens? That becomes an ineligible input tax credit for you as a recipient. You will have to call your supplier immediately and ask him to make an amendment in his GSTR 1A in the same tax period or in his GSTR 1 in the next tax period up to 30th of November of the next financial year. It's very important, right? I've also mentioned the safeguards. You can go through this. Due to paucity of time, we can't go through each and every slide. You can go through this. This is for like a practical case wherein we had defended and then, we had won this particular case. So we had given the grounds of defenses. Now, this is also one more issue. I have to make payment of IGST on my interstate sales. But by mistake, I made payment of CGST, SGST, showing it to be intrastate sales, right? Now, what do I do? For example, let's take into consideration this. I needed to make payment of, for example, 60,000 of IGST. By mistake, I paid additional 30,000 of CGST and SGST, which is here. So what happens? There is a provision. Today we do reconciliation what? Of taxes paid under RCM, output tax liability as per sales, input tax credit as per all our inward supplies. We will catch all of these. So what do? We apply for, today we make the correct payment of 60,000 of tax which we need to make payment. Because it is actually an interstate supply. I had to sell the tire to someone in Karnataka from Maharashtra. But I showed by mistake that I have sold from Mumbai to Pune. So I have made payment incorrectly of CGST, SGST, whereas I should have made the payment of IGST. So if I make the correction up to 30th of November of 2026 for 25-26, it's fine. I can make that correction in my GSTR 1, no problem. But if I do not do so, then what do I? There is a provision wherein the government says, kindly make the correct payment of 60,000 of shortfall of correct IGST amount today. And within 2 years of the making payment, correct payment today, within 2 years from today, you can file for a refund of 30,000 CGST, SGST, which you paid in excess, right? And you will not have to pay even the interest on IGST because you have already paid CGST, SGST. That is section 77 of CGST Act, section 19. You don't have to pay any penalty. You don't have to pay any interest, nothing. And you will get refund also. So it is very simple. Even if 30th November or annual returns they pass, no problem. We can still today, we can make the correct payment of IGST and within 2 years get 30,000 back of CGST, SGST, no interest, no penalty, nothing, right? So I mentioned these particular rules, notifications, sections, you can go through that. So turnover reconciliation, I have also mentioned in this bird's eye view, kindly check spillover effects also. For example, for 2025-26, which we are seeing, if we are reconciling, we can report the sales of our 2024-25 period up to 30th of November of 2025, right? So we need to remove all of those, right? Because We will obviously know that. We will report that. We would have reported that in the annual return of GSTR, in our GSTR 9 annual return of 24-25, where we would have reported that. We would have reported in table 10, right? If I would have issued any credit note of 24-25 in 25-26 pertaining to 24-25 up to 30th November 2025, where will I report that particular credit note, taxable value and tax amount? In my annual return of 24-25, which table of GSTR 9? Table 11. So these particular tables need to be correctly filled. Your CA or the finance manager or you as a business owner need to ensure that you need to remove the spillover effects. If you are to take into consideration 25-26 financial year, remove the spillover effects of your sale reported up to 30th of November 2026 or 25-26. If you were to reconcile the sale of, as per your books, as per GSTR 1, as per GSTR 3B of 25-26, right? So you can check all of these things. We've been through this. Now, for example, for fixed asset sale. Now, in case what happens for fixed asset sale, do we know that there is a valuation rule? If we are selling our plant and machinery, which is making the rubber product, final product, if we are selling it today, so we need to first, whatever value we are selling at, the transaction value, right? For example, if we are selling it at 2 lakh rupees, we bought it at 10 lakhs. So today, if we are selling it at 2 lakhs, so 18% of whatever the tax rate of the particular product or HSN is, we need to make the payment, right? On the transaction value, 18% of 2 lakhs. Or there is also valuation rule. What is the valuation rule? Valuation rule, for example, we'll come to that. Let us see this. This is a fixed asset register. Today, we need to see and open our fixed asset register and see what are our purchases, what are our sales, disposals. If we see AC, if we have purchased AC, can we claim input tax credit on AC? It's a plant and machinery. Can we claim it? If we bought it for our house use, no. If we have bought it for our office use, for our factory, we can claim the input tax credit. Today I am selling what? Fire extinguisher. This is a plant and machinery. I am selling this today. This is my fixed asset. Today, if I am selling this, I need to ensure that if I am selling this today for 22,400, 18% of 22,400 is one GST amount which I need to pay, versus I need to ensure that the ITC reversal rule is also taken into consideration. So let us see this particular example. There are two rules. Let us see this particular example. Rule 44. What does it say? That every plant or machinery or finished goods, your fixed asset basically, not stock, fixed asset, it has a time period, lifespan of 5 years. So if we have purchased the fire extinguisher on 1st of July 2017 for how much? 2 lakh rupees and 36,000 ITC we claimed in the month of July 2017. 5 years is the lifespan. So I can use this forever, but the tax period is 5 years basically. But I have sold the fire extinguisher when? After 1 year, 10 months, 10 days. Means on 10th of May 2019. So per month, how many and how much am I selling it for? I am selling it for the extinguisher, for example, at 1,44,550. So 18% of this amount is the output tax liability on the transaction value, which we are aware of. Now versus what? As I said, you have purchased it in July 17, you sold it in May 19. So 23 months you have used. What was the life period? Life was 60 months. 37 months is the unvested period. So the rule 44, what does it say? 37 months, so sir, you did not use the particular fire extinguisher. Why are you claiming the input tax credit? You have claimed the entire 36,000, 100% when? In the month of July only, 2017. So reverse the proportionate input tax credit for the unused period. So 37 divided by 60 months, which is 5 years, 22,200 is the amount of input which we need to reverse. Or 22,050, which is the output tax liability on the transaction value, whichever is higher. Which is higher? 22,200. So I need to make payment of 22,200 output tax in my GSTR 1, in my GSTR 3B. Today, whenever I'm selling this, and I need to have the taxable value calculated, divided by 18% or whatever that. So do not be satisfied that, oh, okay, if I'm selling any plant and machinery or fixed asset, I will only calculate the output tax liability only on the transaction value. No, we have to calculate also as per the Rule 44 and Rule 40. Rule 40 takes into consideration quarter, 5% for every quarter. You can go through these. I've given you examples. Motor vehicle. So all of these, where will you get loss on sale of plant and machinery? It will come to the debit side of your PL or in your trial balance on the debit side, right? Profit on sale of plant and machinery or motor vehicle, it will come in other income in your PL account, right? Below the top line. But as departmental officers or you today as business owners or finance officers of your company, you need to ensure that you are whether you are following the correct valuation methodology or not. So motor vehicle sale, in case if you have not claimed any input tax credit when you purchase the particular motor vehicle, so when you are selling it, if you in case if you purchased for 10 lakhs but you are selling a second hand motor vehicle, for example Thar, for 6 lakhs today, you are going to see what is the written down value method of the Thar or Scorpio in your books of accounts as per the Income Tax Act, not as per the Companies Act, as per the Income Tax Act. Okay, so as per the Income Tax Act, the WDV is 4 lakhs. So we can take the benefit of the margin of supply method for second hand car sale in case if you have not claimed input tax credit under GST or under the erstwhile VAT or central excise. So margin of supply is 2 lakhs. So we only need to pay 18% of this 2 lakhs, right? 18%. Now it is all the cars, second hand cars, EV, second hand car, petrol, diesel. It can be a Santro for 1200cc or it can be a Mercedes of 2500cc. Second hand car sale tax value is 18%. 12% has gone from January 2025. It has been removed, right? So margin method. Now in case if there is a negative margin, means you are selling it at a loss. So at that point in time, you are selling your particular second hand car, but you don't need to pay any GST on this, right? So there are two things. One is on the transaction value, which you see, no, don't pay GST on the transaction value. Pay GST as per the margin of supply method. It's extremely important, whether you're following that or not. Now, you can go through these specific points and all that. See, there are many times what happens is business income is there. In case if you're a proprietor, you are selling rubber products, tire, and in your personal file, you are getting rental income of 2,70,000, but you are registered under GST. So you need to also pay GST on this rental income, even though this amount of rental income does not form a part of your business income. It comes in your savings bank account. Many times people, they forget reporting this in your GSTR 1 or 3B. So rental income, commission income, any other income of personal nature in the sense that if you are working as a proprietor, right, or if you have taken registration as a proprietor, right. So in that particular case, in case if it is not related to your business income also, you need to add this as a part of your GST turnover. Second is, there are many smart accountants. What they do is they set off credit, the recoveries which they get, like packing charges, loading charges, freight charges, which they charge their customer, which they mention in the invoice as assessable value. They take those particular recoveries, which should be shown on the top line, their sale. But many rubber industry business owners, they do not add those particular recovery of packing charges, loading charges, and freight charges, which they recover from their customer in the top line. This is just the pure sale of rubber product. And what do? 2,76,000 of packing charges which you have received, on which you have paid GST, which is a part of your GST turnover. What do smart accountants, over smart accountants, they do? They take this amount, they set it off against the expense on the debit side of your PL. So it is very important that all the credit entries which you have set off against the expenditure side, because you have expended also, right? You have paid freight charges, you have paid packing charges. So whatever recoveries you are making, you need to report that as a part of your top line, or maybe in other income, but do not set it off against your debit side expenses. In case if you do so, you need to ensure that GST has been paid on the same or not. Okay, ITC 04, we are aware of this, right? As for example, we are rubber, tire manufacturer. We send our tire for example, treading or some sort of a job working, So job worker, they need to send back our particular product, because we are the principal manufacturer, our input within 1 year. In case if they do not do so, what does it happen? It becomes a deemed supply. What does deemed supply mean? Means you as a principal manufacturer, if you do not receive back your input which you have sent for job working within 1 year from the date of sending, you need to make payment of, you need to show that particular amount as your sale, and you need to pay tax on that, and you need to pay interest from the date of sending that particular raw material or input to your job worker. Means entire year interest you will have to pay in cash. So you need to ensure that the goods come back. If it's capital goods, it's 3 years, right? ITC 04, we would have heard of ITC 04 filing, right? What is ITC 04? This is ITC 04, wherein if you are sending goods to you, the job worker, you need to issue delivery challans, right? Outward delivery challans. You need to report all the challan numbers, the dates, the quantity of your rubber products. And you need to also report in table 5 the inward delivery challans which you have received, issued by your job worker, with the challan number tagged with the original challan with which you had sent the original input. That needs to be tagged with the challan, the inward delivery challan, and also the quantity, and this value should also include the job worker charges. So in case if you are not filing this ITC 04, you may receive this notice that, sir, we can't find ITC 04, we don't see a job worker register, we don't have any records of your inward or outward delivery challan for movement of goods. We will take all of these input tax credit which you have claimed from in respect of the job worker charges. You have claimed all this input tax credit, kindly reverse it. This one particular point wherein this particular client could not provide ITC 04 because he had not filed it. He could not provide his job worker register. He could not substantiate that he has received back the goods. So what has the department done? Either the department can say all the goods sent, what is the value of that, and 18%, 5% of that kindly make the payment today along with the interest, and the job worker charges on which you have claimed the input tax credit, that input tax credit reverse. This one particular point, it is tantamounted to few crores just of tax plus interest plus penalty. Kindly ensure that you have an entire trail of goods leaving your factory to goods being received with their challans, with ITC 04, with the registers, right? You need to also ensure that after 22nd of September, the job working rate for our rubber industry for the residual job work is 18%. It's no longer 12%. Earlier it was 12%, right? So for invoices before 22nd of September 2025, the job worker would have charged 12% job working. If he charged 18%, and if you claimed 18%, you have to give back 6%. And this is real life notice wherein they had claimed this invoice, this particular point is of 2022-23, wherein the actual job work tax rate was 12%, but by mistake they had issued the job worker issued tax invoices of 18%. So the client claimed the input tax credit 6% extra. He had to pay back this. 59 lakh, he had to pay all of this back along with interest. So you need to ensure after 22nd September 25, your job working rate is 18%. Before 22nd September 2025, job working rate is 12%. So these you can go through. We've covered sales. Now for input tax credit, now we are aware from 1st of January 2022 and onwards, we need to follow the input tax credit which is appearing in GSTR 2B. In case in GSTR 2B, there is only 100 rupees which is appearing. We need to see what are the block credits, remove it. What are the supplies which are pertaining, what are the input tax credit pertaining to, for example, are exempt supplies. For example, I'm selling rice. So I'm storing the rice bags, for example, in a godown. So that particular rent, I cannot claim input tax credit on that, because that particular input is wholly pertaining to exempt supplies. So I need to remove that. After removing all of that, I need to see what is the eligible input tax credit as per 2B. I cannot claim more than what the input tax credit is appearing in 2B. We are aware of this. So in case if there is any difference between ITC claimed in 3B, if it is more than what it is in 2B, we are aware there is automated return from the GST portal which is generated. What is the return? Return is DRC 01C. We are aware of this, right? Rule 88D. of CGST rules. What does it say? In case if 100 rupees you should have appears in GSTR 2B, you claimed 125. So it is more than 20%. More than 20% of your eligible input tax credit. You have claimed more than this particular 120. You've claimed 125. So you will receive this particular automated your DRC 01C. And you will have to respond back by replying, paying back along with applicable interest, or give a suitable reply within 7 days. Otherwise, GSTR 1 you cannot file. You can't file GSTR 1, you can't file 3B. You can't file 3B of a month. Next month GSTR 1 you can't file. 2 months GSTR 1 you've not filed, you can't generate e-way bills. E-way bills you can't generate, your business will close. So this is very important. GSTR 3B and 2B, you need to ensure that you cannot claim input tax credit more than what is appearing in 2B. Ineligible input tax credit, we are aware, right, that there is a format. Circular 170 came 170 2022, right, from August 2022. Now there are bifurcations. We are aware of this, right? The bifurcations, this. In case if we are claiming input tax credit for block credit, car maintenance, insurance, food, beverage, so we need to reverse that as a permanent reversal, right? In table 4B1. That particular input will be auto-populated from 4B from your GSTR 2B in our table 4A5, all other ITC. Your car credit, insurance credit, food credit, all the ineligible credit will be auto-populated in table 4A5 from GSTR 2B. But you need to reverse it permanently in table 4B1. We are aware of this. And what is table 4B2? We are aware that there are temporary reversals. What are certain temporary reversals? We have not received goods. We already saw, right? May 2022 goods not received. June 2022 goods were received. So in May 2022, what do we need to do? We need to reverse that particular input tax credit temporarily in our GSTR 3B for May, right, in our table 4B2. And in the next month GSTR 3B, we will, when the goods are received in June 2022, what do? We reclaim that particular input temporarily reversed in the previous month. We reclaim it where? In table 4A5 and 41. We are aware of all these. These are basic rules, okay? What do we need to see today? So we need to see that ineligible ITCs have all been reversed. Block credits have all been reversed in table 4B1. We need to see that are we doing reversal of credit of input tax credit in case if we have not made payment to a supplier of the value of supply and the GST within 180 days from the invoice value, from the invoice date. We are aware of this rule, rule 37, right? Second proviso to section 16 subsection 2. Now, what does it say? It says that in case, for example, if today in the month of July 2026, if I purchase rubber from a supplier, if I have not made the payment of this 5 lakh rupees plus 90,000 to my supplier within when? 6 months. 6 months means when? August, September, October, November, December, Jan 27. So if within Jan 27 I do not make the payment of 5,90,000, what do I need to do? In February 2027 GSTR 3B, I need to temporarily reverse this 90,000 rupees where? In table 4B2. This is what we do, right? Have we done that? Have we done that? And if we make the payment in March 2027 of 5,90,000 to our supplier, we can reclaim it back. We can reclaim it back in table 45 and 41. Right? If we make the payment when? 2 years later also, 30th November 2027 passes. This transaction is pertaining to when? 2026-27, right? July 2026 I bought tire. So I have made the payment when? I have made the payment. I have reversed it in. I did not make the payment in 6 months. I reversed the input tax credit in February 2027 in GSTR 3B. I made the payment when? In December 2027, after 30th November 2027. Can I still reclaim the input tax credit of 90,000, which I have reversed temporarily in table 4B2? Which I have reversed temporarily in 4B2. Can I reclaim it in 4A5 and 41 if I have made the full payment after 30th November also of the next year? Kindly please respond in the chat box. This is a very important question. Can I reclaim this? Yes or no? Yes, very good. DIS MRP, very good. Extremely good. We can claim. Why? Because of rule 37 sub rule 4. What does it say? It says that, yes, very good. Rohit Rubber Corporation, Sunil ji, very good. What does it say? It says, as per Rule 37 sub Rule 4, anything which you have claimed within your 30th November of the next year. So automatically you are claiming by the auto population of input tax credit from GSTR 2B, automatically you are claiming in 4A5. And anything which you have reversed, you can reclaim it anytime without, regardless of the time limit as per section 16 subsection 4, which is 30th of November. So reclaiming of input tax credit, there is no time limit. So this is a very important point. But you need to see today, as a GST departmental officer, I will take your bank statement, and what will I see? I will take your creditors aging analysis. Acha, last 6 months, who have you not made the payment, or throughout the year, if you have not made the payment within 6 months from the date of invoice. So you need to also calculate the interest from when. You need to calculate the interest in case if you have not reversed the input tax credit after 6 months. Immediately in the 3B, after 6 months, you need to calculate the interest from the date of claiming. Like when did we claim this invoice was pertaining 90,000, we claimed when? It was pertaining to July 26. I claimed it on 20th August 2026 when I filed my GSTR 3B return. So when do I need to calculate the input tax credit, the interest? I need to calculate the interest from when? From 20th August 2026 to whenever I actually reverse it. If I don't reverse it within 180 days, whenever I reverse it, I need to back calculate. Okay, retrospectively, very important. And this I need to pay out of cash. What is Rule 37A? Extremely important. Rule 37A says that in case if your supplier has not filed a GSTR 3B, you have made the payment to him. Like for example, this 5 lakh rupees of tire you purchased, and 90,000 you've already made the payment of 5 lakh 90 and tire you made the payment. To who? To the supplier. But supplier did not file a GSTR 3B return for the month of July 2026. And the department has proof. Hypothetically, he does not file for 6 months. Now we know that if he does not file for 6 months, his GST registration is suo motu cancelled, right? After giving a show cause and all that. Hypothetically, for instance, next year, by when can you, do you have to check the input tax, the supplier's GSTR 3B filing status? For example, for 2026, this particular invoice is pertaining to July 2026. My supplier has not filed his GSTR 3B return when? Up to September 2027, 30th September 2027. Up to 30th September 2027, he has not filed his GSTR 3B return. What do? Immediately in the October GSTR 3B return, I reverse this particular input tax credit where? In my table 4B2, temporarily. Not permanently, temporarily. I don't even need to pay any interest. If I reverse the input tax credit of this 90,000 in 4B2 in my October 2026 return within 30th November. But if I do not do so, if I reverse it in December 2026, for instance, I need to pay interest from the time when I have claimed this input tax credit, which is 20th of August till date. And when my supplier, hypothetically, he files his GSTR 3B return of July 2026 in January 2028. Hypothetically, revocation of GST registration cancellation he does, or whatever. Hypothetically, if he does so. So, you can reclaim this particular input tax credit which you have temporarily reversed in 4B2. You can reclaim it without any time barring. So, today what do you need to see? You need to see how many particular suppliers have not filed the GSTR 3B for 25-26. How will you see? You will see, where will you see? Just a moment. Here. You will see in the September GSTR 2B return. There is a table 5, very important. Table 5 for your September GSTR 2B return. There is a table 5 wherein it will be mentioned all the input tax credit pertaining to all the suppliers whose filing status is no. First thing. Second thing is, why wait up to September 30th? Please call your suppliers. How will you know? Go to your GSTR 2A of your 25-26. Go to column number 18. Out there, see filing status of supplier GSTR 3B. Do the filters there and see no. If it is no, then you may reverse the input tax credit very well within 30th of November. Right? You don't need to reverse it today. Right? But it's very important that you keep checking this. It's very, very important. Now, this is a real life notice, as I mentioned. this particular client, he did not make payment within 180 days. He made belated payments. He had to make payment by when? He had to make payment by, for instance, he had to make payment in 2019, which is 6 months from the date of purchase. But he actually made the payment in 2021. So 2 years of interest, that comes to 36% of the tax amount, right? So you need to see all of that. Also, you need to see other notices wherein same without, if you have not made payment to your suppliers, you need to ensure, if you have not made payment to your suppliers, kindly either make the payment or kindly reverse your input tax credit temporarily today. Don't wait for the department to bring it up in your in their audit observations. If you have written off any amount which you have to pay to your sundry creditors, which is remission of liability, means which is your income, other income in your credit side of your PL, kindly reverse the proportionate ITC, because during departmental audit they are going to check amount written off which is a remission of liability. So whether you have reversed your input tax credit or not, just because of this point, this particular client had to pay how much input tax credit? 1,20,000 plus interest plus penalty, 2-3 lakh rupees he just had to pay because he did not reverse his input tax credit temporarily until the department notice came in. We've covered all of these things. This is the ITC reversal and reclaim statement, extremely important. One of the most important highlights of the entire presentation. We know that there is temporary reversal which we can do in table 4B2 and reclaim in 4D1, right? So we need to ensure that this electronic credit reversal and reclaim statement, ECRRS, which is there, it does not go negative. Because what is negative means your amount which you have parked temporarily, which you have reversed in table 4B2, right? It comes in this particular ECRRS statement, which is there in your portal, GST portal. This balance is the temporarily reversed input tax credit because your goods have not been received, your 180 days payment, you've not made, your supplier has not filed his 3B, you've not received the invoice, or you are confused, you may receive the invoice later, entry is not made in books, temporarily reversal. Okay, so this temporary reversal is, for example, this amount, but you have reclaimed more than this. Can you reclaim more than the amount which you have temporarily reversed? No. But if you reclaim more than what you have reversed, the closing balance will be negative. This negative balance is a big trigger. This negative balance is a big trigger. Why? Because there will be a system driven GST blocking mechanism which will come into force in the next few months, wherein the GST portal will hard lock your GSTR 3B filing in case, hard stop validation, in case if your ITC reclaim ledger, it is negative. Let us see this example. This has not been enabled on the GST portal yet, but in few months this will be enabled. So let us see this. This guidance or advisory came on the GSTN portal in January 2026. Kindly go through this. I have put in exhaustive details the advisory from the portal, and I've put all these examples also. We'll just go through one example. See here, for example, electronic credit reversal reclaim statement. This is our situation, which is wrong, and this should be the ideal one. What is happening? Opening balance should have been 10. Means there should have been 10 positive balance of your electronic positive balance of your temporary reversal in table 4B2, right? Temporary balance should be 10. Hello. I think someone is unmuted himself or herself. Just kindly allow me just 10 minutes, just some time, then we'll open the floor for question and answers. I would request all the participants to please kindly mute them. Made the payment. I would request the
Raj, I'll request you all to mute everyone else, please. Thank you.
Thank you. So if you were to see this particular example, this is going to be the pain point in the next few months. Right now, let us see this particular example. The ideal situation should have been positive temporary reversal balance in table 4B2. It should have been 10. But we have reclaimed 25 rupees more. Means it should, here the balance should have been, basically the closing balance should have been what? The closing balance, let us see in this example, the opening balance should have been 10, means the closing balance of the previous month should have been 10 positive. But it is minus 15. This means we have reclaimed 25 more than what it is here. Obviously, it's concept, right? Whatever amount is here temporarily reversed, I have reclaimed 25 more. That's how I have a negative 25 balance, right? I have a negative 25 balance. So here what is happening? Negative 15 balance, and it should have been 10 positive. So I have reclaimed 25 more in my table 4D1 and in my table 4A5, right? All the others are correct. The auto population of ITC is correct. It should be 70 in table 4A5. Our block credit is 10. It should have, we put 10. We've reversed 10. Fine. Our temporary reversal for that particular month. We've not received certain goods in the month of July 2026. 15 we should have reversed. We've reversed 15. Very well. All correct. For during the month, all entries are correct. Net ITC during the month, what should have been 70 is auto populating from 2B. It has 10 rupees of car block credit. So it becomes minus 10, 60. Then this much amount of ITC of goods which have not been received in that particular month, I reverse 15. So 45. 45 is the amount which hits my electronic credit ledger, 4C, right? And 20 I have reclaimed. 20 in the month, like 15 I have reversed in that particular month for the goods not received, but 20 I have reclaimed, which I had reversed in earlier months in 4B2, which the goods which have been received in this month. So I can reclaim, no, not a problem. These are during the month entries. 15 I have temporarily reversed here, 20 I have reclaimed. I can do so, not a problem. What is the closing balance? It's minus 20. The department is saying, sir, you cannot have less than 0. You cannot have a negative closing balance of electronic credit reversal reclaim statement. Your ideal balance should have been 5. It is minus 20. So we will not allow you to file your GSTR 3B return. If your GSTR 3B return is not filed, you will not be able to file the next month GSTR 1 return. Consequently, you can't file GSTR 3B return of the next month. You cannot file 2 GSTR 1 return. Your e-way bill blocked. Your business shuts down. This is extremely important. From your business shutting down to this particular point is a very, very narrow stream, continuous process. So what do you need to rectify? The department is saying, sir, kindly ensure that this minus 20 is either 0 or it should be your correct figure 5. So what do you do? What do you rectify? You have overclaimed 25, right? So you derive this 25 overclaiming from the opening balance. What do you do? Make the reversal in your 4B2. So of 25 to nullify this opening balance anomaly. So now what is the net amount which you are reversing in 4B2? 15 for the month. That is fine. Plus 25. So 40 you are reversing. We are adding 25 to 4B2. 40 you are reversing. So now what is the net ITC which you are claiming for this month? 70 minus car credit, 60 minus 40. So we are, how much are we claiming? Here 70 minus 10 is how much? 60 minus how much here is 40. So 60, 40, 20. Now we have reclaimed 20 here, right? We have reclaimed 20. So once we make the adjustment here, we make further reversal. 25 if we made further reversal. So this minus 20 plus 25, it becomes positive 5. So what am I trying to say? I am trying to say 25 you need to reverse. You need to claim less out of 45. You can only claim 20. Net you can claim 20. 25 you need to reduce from this 20 from this 45. So if you don't have enough credit, here you had enough credit 70. But if you don't have opening balance enough credit, you need to pay out of your pocket. So you have to rectify the anomaly of overclaiming of temporarily parked input tax credit in table 4B2 or rectifying your electronic credit reversal reclaim statement negative balance is a must. Every month we should do. And we should ensure here we add 25. This means we are reversing for the 25. We are not claiming input tax credit to the extent of 25 out of 45. We are only claiming 20. Right? So what is now the correct closing balance? Minus 15 plus 40 and minus 20. We will again see minus 15 plus 40. Minus 15 plus 40 is how much? 25. 25 minus 20 reclaiming is remaining positive 5. Right? So now this particular amount has become either a positive number or correct. So you need to pay 25 out of either the credit ledger or the cash ledger. Now it is only a warning sign which you are receiving, a warning signal, red, it's becoming red. But in the next few months, you will not be able to file your 3B if it is not a positive figure. You need to rectify it in the same month. Similarly, for your RCM statement, we are aware of an RCM statement, right? What is an RCM statement? Any amount which you pay tax under RCM in your table 3.1D, right? That is the tax which you pay for any input tax credit which you claim from registered suppliers subject to your particular RCM, basically. So there what happens, there also you cannot have a negative balance, right? So you need to ensure that you need to rectify this. So 25 rupees of either tax you have to pay under RCM in table 3.1D, or you have to reverse the input tax credit which you claim under RCM in table 4A2 or 4A3 of GST or 3B. Either of the two you need to do. Then this will come to either 0 or 10. So you need to pay 25 either in tax in table 3.1D to rectify it, or claim less of input in table 4A2, 4A3. Reverse that, right? Very important. All these examples I put in, you can go through that. We also need to see rule 42, 43. We are aware of this, right? I'll just rush through the remaining slides. You can go through that and then we'll open the floor for question and answers. For 42, 43, we are aware, right? As rubber industry, for example, we are selling some product. For example, rice along with rubber. So rice is an exempt supply. Rubber is a taxable supply. So in this particular example, we need to see, if you are to see, that total is 404 crore is a total taxable turnover. 100 and how much is this? 1 crore is our exempt supply. So 20% of the total sale is exempt supply. So we need to calculate the common credit. What is the common credit? The total credit minus the input for block credit, minus the input which is not for your business, minus the input tax credit which you have claimed, which is wholly for your exempt supply. As I mentioned, rental input which you are claiming for the warehouse where you are storing only your rice products. So that input you cannot claim because the supply of rice is exempt. How can you claim the input for that? Similarly, the total input tax credit which you have claimed, which is wholly linked to your taxable supplies, output supplies. So your common credit means the credit which you are using means your common office rental or common Airtel broadband or common Vodafone payment which you are making and GST which you are making. So you're using that for both your exempt supply and taxable supply. So common credit. You need to calculate this common credit, and every single month you need to ensure that you calculate the correct amount of input which you need to claim and the amount which you need to reverse with portion of your common credit which you need to reverse proportionate to your exempt supply, that needs to be reversed in table 4B1. And at the end of the year, you will take the entire aggregate taxable supply and this is a monthly exercise, but annual also I will do. And in annual, if I see I had to reverse more input tax credit, but I reverse less, so I need to further reverse it in table 4D1. Extremely important. So these are few real life notices. You can go through these. I've given it to you. Year-end actions also we mentioned. See, these are block credits. We are aware of block credits, right? Motor vehicle, insurance, etc. These are real life notices. You bought air purifiers. You bought what? ACs. You've taken services from event management services. These are all real life notices received as audit observations of clients from the rubber industry. So here you need to prove to them that, sir, this furniture which I have bought, it is movable. I have capitalized it, but it's movable. I've used it for my business purpose. But all of these things, these are descriptions of the HSN of your services and goods of your suppliers. And they are debating all this. See, just this particular notice, 27 lakh each of CGST, SGST, 11 lakh of IGST. This one point in itself is 60 lakhs of this particular ITC reversal. So you need to also ensure that any amount which you pay for construction of your shed, construction of your godown or painting or any renovation, to the extent capitalized, you cannot claim input tax credit on that. Means you cannot claim input tax credit on sand, on steel, aluminium, on permanent fixtures, paint. If you have cost of improvement, cost of acquisition, etc., whatever. But if you have capitalized it in your books of accounts, you cannot claim it. But today, if I do, for example, paint of my office building and I put it to my repair and maintenance, can I claim input tax credit of that? Yes, I can claim input tax credit because it is not a block credit under section 17 subsection 5 clause D. Extremely important. Right? So you need to ensure that all the expenses which are there in your debit side PL needs to be evaluated and seen whether there is any personal nature expenditure you need to reverse, block credit, reverse, ineligible credit, reverse, or any 4243 common credit, reverse, or anything to do with your these block credits which I mentioned, related to your permanent land and building, if any renovation which you've done to the extent capitalized. But movable furniture, anything which is movable, furniture, lights, or anything, if it is movable, it is not immovable. Even if you've capitalized it in your books of accounts, the taxable value, you can claim the input tax credit. Not a problem with that. There are certain other slides also. Vishalji, do we have 5 minutes? I'll just rush through a few other slides, or we can open the floor also. Just let me know if I can take 5 minutes, or we can.
No, absolutely, sir. You can. Please go ahead.
Okay.
It's a very interesting session.
Thank you, Vishalji. So now let us just wrap up. 5-7 minutes. There are other points which you need to see. Okay, post sale discount. I am a tire distributor. I am buying tires from Apollo. Okay, and I am a tire distributor. Now Apollo Tires gives me discount of 20%, and they say that, sir, it is not specific to one particular. For example, Tulsian sub distributor or contractor comes and they want to buy 100 tires from you. So Tulsian distributor, the sub distributor, contacts the Apollo Tires manufacturer and they say that, sir, we are buying 100 tires. Please give us 30% discount. So the distributor, the manufacturer, Apollo Tires, what do they do? They say, okay, sir, calm down. Through one distributor, the distributor such as, for example, yourself, I will give 30% discount. So for one specific customer, there is a tripartite agreement for a specific customer. I am giving extra discount for bulk order. So if any discount or any promotion is given by the manufacturer through the distributor to the final customer for that customer as a tripartite agreement directed towards the bulk order of that customer, then that extra amount of 10% discount that is added as a consideration. In the consideration as per section 2 clause 31, it forms a consideration of the tire amount which you are selling to the end customer. So you are going to include this 10%. You will not reduce this discount. GST you will have to charge only on 20%. This 10% extra which you have got from this will be part of the consideration. And you will have to charge GST on that. But if Tulsian sub-distributor does not come, if some retail customer comes, or there is a drive, now, Diwali will come, Durga Puja will come, Ganpati Puja will come. There will be, events, where there will be normal sale drives, right? There will be discount schemes. So if there is a discount scheme, volume discount, bulk discount, post sale discount, whatever discount it is, all those discount schemes, if we have any here. So in that particular case, if the manufacturer is giving any discount to the distributor, which is you, the Apollo Tires is giving any discount to you, in that particular case, that particular discount received, which is there as in your credit side of your PL, as discount received. Earlier, the GST officers used to take that amount and be like, oh, acha, you received discount. So you have given a service to Apollo Tires. You've given service. He has made payment for promotion, or he's made payment for co-branding or advertisement or some sort of a sale drive. You have given service. Where is the invoice? You've not raised any invoice. Kindly give GST. They were harassing whenever they used to see discount received. Now they have as per the new circular 251, extremely important. New circular 251. This came into being from 1st October 2025. Any normal post-sale discount, anything which is not directed to a customer specific deal, it will not form a part of any promotion, and what do you say, you are not giving any promotional service to Apollo Tires. So you don't need to raise any invoice for any discount received for any normal sale drive, okay, or any post sale discount. But for us customer specific, if Tulsian sub dealer comes and Apollo Tires gives guaranteed 15% off, this forms a part of this discount, will form a part of your sale consideration when you are selling to Tulsian's sub distributor. And but if it is a promotional agreement, proper promotion agreement of co-branding, of advertisement, of sale drive, special sale drive, where branding, logo, sale drives are there. So in that particular case, you as the rubber distributor, tire distributor, you are giving promotional services to who? Apollo Tires. So you are going to raise an invoice and you are going to charge GST. It's extremely important that you have clarity, you have proper agreements, proper writing agreements of what agreement or what nature of agreement it is. Is it a specific client agreement, tripartite agreement? It's a normal volume based target, no problem. Is it a financial credit note for normal discounts? You know GST is to be, the implication comes in, or it's a proper promotional drive, right? With co-branding, etc. Then you need to whatever. This is RCM liabilities. You can go through these. There are few changes which have come for intermediary services. All those business owners today who have joined, they are exporters. Whoever are exporters, if you are an exporter and if you are exporting your tires or rubber or products or pipes or anything to Dubai, to US, to Brazil, to China, and you are availing the benefit of some commission agent there. So the commission agent is giving you service. You are the service recipient. Now, as per the amendment from 30th of March 2026, where in section 13 subsection 8 clause B of IGST Act 2017, what has it become? The place of supply of this particular service of receiving inbound service from any foreign party. In that particular case, intermediary, this is an intermediary service. This commission agent, he is an intermediary, right, between you and the foreign purchaser, right? He is the commission agent. So in that particular intermediary service, in case if you are receiving services from a foreign agent, so in that particular case, the place of supply of this particular intermediary service now becomes the location of the recipient, the default rule, section 13 subsection 2, extremely important in the presentation. So what is the definition of import of service? Import of service is that we as rubber distributors, we are service recipients, we are located in India or outside. We are located in India. This is section 2 clause 11 of IGST Act. The service provider, Dubai commission agent, is located outside India, and place of supply of intermediary service is in India, because the location of the place of supply for inbound services, for intermediary services, it has become the location of the recipient of service, which you are the recipient of service, because you are receiving the foreign commission agent services. So it becomes an import of service, because all three conditions are satisfied. If it's an import of service for you, you need to pay tax under RCM, extremely important, of 5%, 18%, 18%, because this is commission agent, and you can claim input tax credit. If you are just an exporter, EOU, SEZ, EOU, it is a big whammy on you, because you are not having any domestic supply. So your RCM input is accumulating. But you have to apply for refund. So once you apply for it, a refund and all that, it becomes an issue, right? 60 days you have to wait if you apply an RFD 01, or you get, if you export with payment of IGST, so you get so. But the ITC gets accumulated. But in case, if you are the service provider, if you are the intermediary, if you are a rubber intermediary, okay, you are not selling the good, but you have caught some rubber distributor here in India, and you have found a customer outside, and if you are the intermediary, if you are the broker or facilitator, so you are providing service to whom? You are providing service to the foreign party, right? You are raising the invoice to the foreign party. So in that particular case, the place of supply is the recipient of the supply. Recipient of supply is outside India, so it becomes an export of service. Section 2 clause 6 of IGST Act. You are the supplier of service in India. Recipient is in South Korea, right? Place of supply is outside India. Why? Because the location of the recipient is who? The person who's receiving the intermediary service, who is sitting outside India. in South Korea. So place a supply outside India. You're receiving in dollars and etc. whatever. So 5 conditions. So it's an export of supply. You don't need to pay tax under CGST and SGST in case if you are an intermediary in India. You will get the zero rated status. Extremely important from 30th of March. You can go through the other slides of RCM for renting of residential dwelling. In case I have given a particular chart, extremely important. In case if you have a godown and the landlord is anyone, he's not registered, landlord is not registered, and you have taken on in Dankuni or for example in Pune or Mumbai somewhere a godown or warehouse. So what do you need to do? Tenant, you are registered. Yes, you are registered, but the landlord is not. You have to pay RCM. From when? You need to pay RCM from 8th October 2024. Kindly go back in time. And if you have not paid tax under RCM, kindly do so, because the next year GST Departmental Audit Notice under Section 65 will come, will be of 23-24, 24-25, 25-26. So it's extremely important we pay RCM for commercial dwelling, for residential dwelling. Kindly follow the chart. These are all real life notices of GTA, etc. You can go through all of these things. For GTA also, you need to ensure whether the goods transport agency is issuing a consignment note, whether he has chosen to pay tax under RCM 5% or whether he has chosen to pay tax under FCM for the particular year, whether he has filed Annexure 3 is on the invoice or not, whether he has submitted Annexure 5, whether this particular declaration is there in your invoice or not, that we have opted for forward charge mechanism of, for example, 18% with ITC. So if we are availing GTA services, we don't need to pay tax under RCM because our GTA is giving an undertaking in the invoice. You have to check your invoice, transportation invoice. There needs to be an annexure, Annexure 3. They will mention the transporter. We have opted for forward charge mechanism tax payment for financial year 25-26. Kindly do not make payment under RCM. We are making payment under FCM. So you can claim input tax credit of that. So you may go through all of these slides. Importer services I mentioned, etc. So what I have done is tools and dies also I put. So all of those businesses who are exporters, rubber exporters, extremely important slides are to follow. Due to paucity of time, we will not be able to cover all of these things, but these are extremely important analysis. Tax planning also I put in here. For these tax planning, we charge few lakhs, So I've also put that here, okay. Kindly go through these. These will help you in tax planning. For your tools and dies which don't move outside India, for your foreign OEMs, you can even save taxes. You can, save yourself from these kind of notices of tooling cost. You can go through these. Any questions you have, you can later on also connect with me. I've also mentioned RCM in respect of ocean freight for export and for import also. It's a bit of complicated exercise, but for exporters, they know this concept. I've also mentioned in detail the Supreme Court case laws, where it is exemption, where do you need to pay RCM, what do you need to do within how long, within 30 days, self-invoice you need to create, all of those things. Rule 86B, are we aware of this? We as rubber, business owners, do we have a taxable supply of domestic supply apart from our export supply every month more than 50 lakhs? In case if it is more than 50 lakhs, are we paying tax of 1% in our electronic? Are we paying 1% of the output tax liability fixed as our cash? In case if our monthly taxable supply, domestic supply is more than 50 lakhs, this is Rule 86B. If we don't follow this, are we aware that the GST departmental officer, they can even suspend our GST license? They can suspend it, mind it. Extremely important point, Rule 86B. In case if we are large domestic taxable these business houses, we need to ensure that we are making payment of 1% of your output tax liability by electronic cash ledger fixed in those months, wherein our output tax liability, the outward sales, is more than 50 lakhs. There are few exceptions which are there. In case if you've applied for refund in any of the previous years, 2 years, or more than 1 lakh, then you don't have to follow this. You can use the entire 100% of your electronic credit ledger, right? Or in case if any of your managing directors or your partners or your whole-time directors, if they have paid income tax, your gross income tax of more than 1 lakh. So you can go through these. Cumulative cash payment. If today, in the month of July, if I'm filing the GSTR 3B in August 2026, and in July 2026, I have a turnover of 1 crore of rubber tires, 2 domestic parties, I need to follow Rule 86B. What are the exceptions? The last exception is for April, May, June, these 3 months leading up to July. In these 3 months, if my net output tax liability, which I made the payment of, if it is more than 1% in my electronic cash ledger, if I have made more than 1% of tax payment of output tax liability, more than 1% payment of output tax liability in the 3 months combined in April, May, June, then for the month of July, I don't need to follow this. You can go through the example, you will be able to understand it clearly. So, I've covered a lot of other issues also here. Pure agent, I've covered your notice pay, catering services, employee transaction, related party transaction, corporate guarantees, all of these things. In case if you're giving corporate guarantee on behalf of a subsidiary to a bank or a financial institution as a promoter or as a company, what should be the GST implication, the complex parts. So those are there. In addition to that, I've given you checklists. So these checklists you will not get from anywhere. These checklists are which I have created. These checklists you need to follow. Here, if I mention the health compliances, kindly follow these here. If you were to see, these are 10 common GST errors. These are your audit readiness and litigation. These you need to prepare. These further slides also I mentioned, and in the end I also mentioned certain ratios which you need to see, that these ratios need to be favorable, otherwise departmental audit comes. These are comprehensive verification and records. These are all which you need to maintain, which are to be submitted when a GST departmental audit happens under section 65. Also, your compliance pitfalls, your compliance audit manuals as per the ICAI, as per the GST, the best practices. I've mentioned all of these checkpoints for you. So you can go through all of these things. This is a more than 200 slide presentation. So it's like a big fat book. So, you can go through all of these things. I've also mentioned every table of GSTR 9, GSTR 1 and 3B. What document you need to have. This is the most exhaustive checklist which, you can go through. Your chartered accountant can go through. Your tax department, in your company can go through. You need to have all of these things to verify against each and every table of your 99C and your 3B and 1 so that you don't miss out anything. Okay, so we're more or less, I am done covering all of these things. Let us open the floor for questions. Okay, we have made the payment to the chit fund in the company's name with the company's GST registration. Please confirm whether the GST paid is eligible for ITC. It should be classified. Sir, chit fund means what? Chit fund means either if it is an eligible element of your CSR activities, corporate social responsibility, under your whatever your rule under your Companies Act, you will not be able to get input tax credit because it is blocked under section 17 subsection 5. I think it is a clause towards the end, IAA or something, J or something like that. So in case if you are making any payment for donations, if you are making any payment for CSR activities, so which you need to do, in case if you exceed certain thresholds under the Companies Act. So large companies, they need to calculate the 2% of their profit, of average profit of the last 3 years, right? Opening closing balance of the last 3 years, you need to pay that. So chit fund per se, it has nothing to do with your business. In case if it is related to your CSR, you cannot claim, so it's specifically blocked. In case if it's just a personal expenditure or something not related to your business, you cannot claim. So in case if you can prove to the departmental officer that, sir, this chit fund is directly related to my business as per section 16 subsection 1, this is in furtherance of my business, so I can claim input tax credit. I would advise, this is a very litigated area. Kindly ensure, this is my tax advice to you, do claim it before 30th of November, put it in table 4, claim it in table 4A5, automatically it will come from your 2B, reverse it in table 4B2, temporary reversal, reverse it in 4B2 and don't reclaim it until and unless you get certainty. You get certainty means, there's a notification or case law comes out, etc. And do not utilize, for example, chit fund you made 5 lakh. So 90,000, okay, is the GST amount. So you have claimed it, but you've reversed 90,000 in table 4B2. Ensure that your electronic credit ledger balance does not go below 90,000. Because if it goes below 90,000, you have utilized this particular incorrect availment of input tax credit. So you will have to pay interest to the extent of the shortfall. This is Rule 88B, read with Section 50, subsection 1, which is retrospectively amended from 1st of July 2017. So tax planning also you can do so. We have already made the payment to the supplier. However, the supplier has not filed their GST return. As a result, the invoice is not reflecting in our GST 2B. Okay, since the invoice is not appearing in 2B, we are unable to. Very good. You cannot claim the input tax rate. Kindly advise how we can recover this ITC from the supplier. The supplier does not file GST return, and the ITC cannot be claimed. It is a result of financial. Yes, sir. It is a loss. Arun Polymer. This is a loss. Now what happens is, see, you have time. For example, let's take this example 25-26. Okay, for 25-26, the last day up to which you can still claim the input tax credit without any element of interest and penalties, 30th of September 2026. If your supplier, his GST registration is cancelled, so it is very unfortunate that if your supplier GST registration is cancelled and all, or if he is not, if there is proof as on 30th of September that he has not filed his GST 3B return, as I've told you, check your table 5 of your GST 2B of September 2026 return. See table number 18 of your GST 2A of your, the supplier GST 3B is filed. So it's no. So you need to reverse it within November. Kindly do so and sit tight. Do the reversal in 4B2, no problem. But if the supplier, again, if he revives, if there is any revocation, etc., then you can reclaim it without any time limit. First thing, you don't need to pay any interest if you reverse within 30th of November. So it is very important, these two things you see. Third thing, I also give you another tax advice. In case if you have claimed also this, and if you have claimed, but you have not utilized this during the time, if you are reversing this, for example, when you are reversing this in before 30th of November, but before up to reversal, if your electronic credit ledger did not fall below 90,000, so you don't even need to pay interest in the departmental audit later. Fourth thing, what you can do is, there is a communication tab. You go to user services, see communication to taxpayer. Go click there. Now out there, go to recipient or supply. Put in your detail like a letter attachment or write there that we are trying to reach you. We have sent you emails. These are the correspondences. You are not responding. Your 3B has not been filed. We are bona fide recipients. We have claimed input tax credit. But as per complying to Rule 37A and Section 41 subsection 2, we have reversed it suo moto within 30th of November in our GSTR 3B table 4B2. Kindly file your GSTR 3B return at the earliest. Click that, submit it, take a copy, put it with yourself. Also, write a letter if required to the jurisdictional officer or of your supplier, of your particular supplier, in case, you can get hold of, you will know in search taxpayer, you will go, on GST portal, you can see where is his jurisdiction. Thirdly, you can also have as many email correspondences. Send him enough correspondences. And now I would also like to inform that 2 days ago, as Vishalji very rightly mentioned, that few days later on the 15th of July, I suppose, there will be a GST Council meeting here in Kolkata. GST 57 GST Council meeting, if I'm not wrong. Right now, what we have the information that Fitment Committee and Law Committee of the GST Council, they have approved a particular plan or a relief for the bona fide recipients such as yourself, that in such bona fide cases, when you have made payment of your value of supply 5,90,000 of your tax, you have bank receipts, you have bank transactions, you have invoice, e-way bill, everything, but your supplier has defaulted, you will not be penalized. So kindly wait for up to 15th of July. There is one more benefit which will come to you. In addition to all the tax planning which I mentioned, you can also note down Suncraft Energy Supreme Court case law, which has been, affirmed by the Supreme Court, by the Calcutta High Court, which was further affirmed by the Supreme Court in Suncraft Energy, 14th of December 2023 case law. In addition to that, there are 10 numbers other, like hundreds of other case laws. Airtel case law is there, Bharti Airtel 2022, etc., etc. There are many other case laws. You can quote that also. Please share your company name and email address so that we can email you this PPT. We would also be happy. Okay, this we have mentioned. Okay, you can connect with us. That's fine. Bimer, this is what is there. We require your clarification on the GST on ERP accounting treatment for the following scenario. Okay, our manufacturing unit is located in Tamil Nadu. Okay, and we have warehouse in Karnataka. Okay, goods are first transferred from the Tamil Nadu unit to the Karnataka warehouse. Okay, so your Karnataka has the manufacturing unit, and this is goods have been transferred to the Karnataka warehouse through a stock transfer. Yes, the stock transfer will be, it is under the same pan, different GSTN, so you will have a proper GST tax invoice. Okay, so this interstate branch transfer, it needs to have e-way bill. Only delivery challan will not work. It's a proper sale for your manufacturing unit of Tamil Nadu. It's a proper purchase for your GSTN of Karnataka. Thereafter, a sale invoice is raised from the Karnataka warehouse to customer. You also need to raise a sale invoice from your Karnataka GSTN on your, Tamil Nadu GSTN on the Karnataka GSTN. Karnataka GSTN can claim input tax rate on this. Now, Karnataka GSTN is further selling this, fine. Not a problem. In certain cases, after the sale invoice is issued, the customer agrees to a price increase. Okay. Accordingly, we raise a debit note, very good, to the customer for the differential amount, very good. So now applicable for the price increase, stock transfer also applicable. No. So we have received, you have issued, no. Accordingly, we raise a debit note to the customer for the differential amount. So now applicable for price increase. Yes, stock transfer also applicable. So you can do that. You can raise a debit note from your Tamil Nadu unit to your Karnataka unit. There is no time limit to issue a debit note. Mind it. There is a time limit to issue a credit note under section 34. There is no time limit to issue a debit note. You can issue a debit note for this particular invoice, firstly from the Tamil Nadu GSTN on the Karnataka GSTN, you can increase the price of the stock transfer. So there will be a nullification, right? Sale and purchase, it will be nullified. Then the eventual sale will be booked in your Karnataka, your GSTN with your tax invoice and your debit note. So your final sale will be booked in your GST turnover will be booked in your Karnataka, your GSTN. So you can issue the debit note from your Karnataka GSTN, that is fine. But from Tamil Nadu also for stock transfer, you can issue a debit note, not a problem. Even if you don't want to issue a debit note also, you may do so, but for keeping parity of the stock price, in your stock in your stock ledger, it is good that you have that particular debit note. So it is a revenue neutral transaction pan wise for your entity, because for both the entities at the pan level, when you will consolidate your financial statement, it will your Tamil Nadu sale and your Karnataka purchase will net out. Director remuneration, yes sir, very good, Arun Polymer. Director remuneration RCM is applicable. Director remuneration RCM is applicable today. If I am a director for a private limited company, I have sitting fees which I receive 5,000 for 4 board meetings. So the company has to pay 18% GST on each sitting fees of all the whole time directors. First thing. Second thing, in case if I am giving you services today in the capacity, for example, of just as a director, fine. But if I am giving you in the capacity of, for example, a chartered accountant. So I am giving you services as a chartered accountant and I am the director also. So in that particular case, what will happen? Whether this will tantamount to payment under professional charges or it will tantamount to TDS under section 194J, or if director is a whole-time employee, the TDS is deducted under section 192 salary. Kindly make a note, if there is a form 16 salary, TDS is deducted under section 16. The amounts which you are which are being paid to the director as an employee for director remuneration, etc., and all that, that particular case, that is an employee-employee transaction. Okay. In addition to that, in case if you are receiving anything in the capacity of a director, so it is always advisable that the company pays RCM. Here also we mentioned, just a moment, we mentioned director remuneration here, just a moment. Director service. I think that I do not have director service because it's a very basic point. Nevertheless, so what you have to see, just a moment, what you have to see that whether the particular amount is being received by the director in the capacity of executing services as a director. But if the director is giving any property for rent to the particular company, so any amount which is being paid by the company to the director in its individual capacity as a person, as a landlord, there is no RCM applicability. Only in the capacity of sitting fees, only in the capacity of director remuneration, only in that particular case that your RCM will be applicable, and the company will also have to issue a self invoice within 30 days from the in as per section 31 subsection 3 clause F, and that will become the basis of the claiming of input tax credit for the company within 30 days from the date of giving of the service. We have a goods EV which does not require registration. How do we generate EV bill without vehicle registration number? I didn't understand. It's an EV goods vehicle. We have a goods EV which does not require registration. How do we generate EV bill without vehicle registration? So, sir, whenever you have to fill part B of the EV bill, you need to mention the vehicle details, you need to mention the transporter ID and the details. So, if there is a GTA or if there is a GTO, means if he's not even issuing a consignment note, there is only road challan, he will fill the part B. You can transfer the goods from your factory within 50 kilometers, you can transfer it to the transporter godown. He will fill part B and he will have to fill this particular the part B amount, the vehicle number, the all of those things. Reference filing of Tran 1. Can we ask department in RTI to give us details of our creditors filed and reported their liabilities while filing of their Tran 1 report? So you can try this, but Tran 1, there was an opening of Tran 1 after the Supreme Court judgment of Philco World Trade Center in August 2022, if I'm not mistaken, and they had reopened the Tran 1 window from 1st of September to 30th of October, if I'm not wrong, or 30th of November, for you to rectify or file any Tran 1 at that point in time. So in case if you have refiled or if you have rectified any of the Tran 1 details at that point in time, RTI is basically for all of those details which are there with the government department. But then under the RTI also there are certain restrictions, or you may say certain reservations. So one has to check that this particular, the GST details or the backend details or whatever, those things they can give you or not. You can try that. Now the ITC issue is in GStat. Yeah, GStat, sir, see, is the last fact-finding authority. You have time up to 30th of July, but we've received 2-3 days ago only. You can, if you are unable to file your APL 05 within 31st of July, you can make a digital token before 31st of July, mentioning the details online in the digital token that you want to file, but you are unable to file due to these reasons. So within the next 60 days also, from then you can file. We are purchasing goods from Maharashtra and we are exporting to our customers from Mumbai port, okay, Mumbai airport, okay, without purchasing from Maharashtra and we are exporting to, okay, without inward in our factory located in Karnataka. That is fine. Is there an e-way bill? No. So, sir, this is a case of you are. This is a case of what I would say. You are. Here you have to mention in the ship to details. I would not say ship to details. I would say in this particular case you are exporting, right? You need to refer to this particular. I'll just show you also. Just a moment. 2nd of July. I'll give you the answer also. How do I remove this? Yeah, you need to see this particular tutorial or FAQs which have been received on the 2nd of July, just a week ago, for exporters. So see, for exporters, here, your answer is here. Just a moment. Yeah, merchant exporter. So you are a merchant exporter. So what are you doing? What should be entered as ship to GST, and in export, bill to ship to cases. In export supply, you are involving here bill to ship to. So you are not getting the goods in Karnataka, you are taking it directly at the airport, right, at Maharashtra, right, for export. So here what you should do in export sub-supply type, bill to ship to transaction, ship to GSTN is proposed to be entered as unregistered party because your foreign importer is an unregistered party whom you are shipping to, right? Where the ship to location is export linked. But if you are see, what should be entered in the ship to address and pin code in export cases? The actual destination address, which is there, which is the port, airport in Maharashtra, CFD, ICD, CFS. You need to mention that particular pin code and the particular destination detail. You don't need to put GSTN detail here, but you need to put the ship to address and pin code detail in these export cases. So how should merchant exporters such as yourself be handled? Where goods are billed to a registered merchant exporter, means your supplier, he is directly moving the goods to the port or airport in Maharashtra. So what he will raise, that particular e-way bill, it will be billed to GSTN, would be the GSTN of yours. He is billing it to you. And ship to is required to be captured as a mandatory data wherever the ship to is there. So if he selects a combination or just bill to ship to, and if he bills it to you, he will ship it to URP. But the dispatch address, means the dispatch to address, will be the ICD CFS airport. So this you can read this particular, and they've given the cases also. This has just come a week ago. You can refer to this. Okay, can we hold GST payment if the supplier is not filing ITC? Sir, if you hold the GST payment if the supplier is not filing ITC, means not filing his GSTR 3B return, you can definitely hold your payment. In fact, in the industry, it's become a norm that up to 14th of the next month, up to when the GSTR 2B is generated, that you as a supplier, or what you say, the customer does not release the payment because he wants to see in his GSTR 2B that the supplier, which is you, for instance, you have uploaded and filed your GSTR 1 in time within the 10th of the month. So many times people only release the payment after they see that this particular invoice has been properly uploaded in GSTR 1 timely within the 11th of the next month, and it is appearing in his 2B, and only after 14th of the succeeding month he can see so. But kindly ensure that in case if you are not making the payment within even 6 months from the date of the invoice, kindly make a temporary reversal of the input tax credit, etc. In case if you are not making the payment. But if you are holding the payment, as that's what I'm saying, that if you are not making the payment to the supplier is a default, that is fine. But you as a recipient, it is your responsibility to comply to Rule 37 Rule 37 Section 16 subsection 2 second proviso, which you have to reverse the input tax credit temporarily within 6 months after just the GSTR 3B filing, just after 6 months end from the date of the invoice. Temporarily reverse the input tax credit in table 4B2. And as I told you, kindly use communication online, like mention it, have those evidences and all of those things. But if you have reversed temporarily, you don't have any worry. You are not to pay any interest or tax payment, but you can withhold the payment. No, not a problem. We are purchasing goods from. We have already discussed this. Okay, we will not.
Yes, that's me trying to, uh, bring this session to a fitting end, Ishanji.
Sure.
But it was a great session, Ishanji.
Thank you.
I mean,
Thank
I
you.
really did not want this to end,
No,
but
of course, we have to.
but then it's a Monday evening as well.
Absolutely.
And I'm pretty sure you have also other
Yes,
commitments.
yes.
Yes, but it was very insightful, and there were many topics which we've heard about a lot, but then somehow they skip off our heads or the top of our heads. For example, about the motor vehicles. A lot of people buy motor vehicles under their company names, and then when
Yes,
it's time for them to sell it off, and plus capitalization of assets. So
yes.
yeah, these were really good points you touched on.
Thank you so
So
much, Vishalji. Thank you, everyone, for a very
thanks a
patient
lot.
hearing. Thank you so much for having that patience. And of course, I'll share the presentation with you in case if anyone has any queries or anything like that. Please feel
Definitely,
free to connect to us on our email address also, which is there in the presentation, or through the Rubber Association also, through Vishalji, through Rajji also. You can get in touch with us. So we are always available for you, not a problem. Thank you, everyone. Thank you so much.
Thank you, Ishanji, and I would just like to thank you to our Eastern Region Chairman, Shri Vishal Bagaria ji. It was his efforts to come out with such a knowledgeable topic. Thank you, sir, once again,
Thank
and
you.
stay in touch
Our
with
pleasure.
Thank
I
you.
mean, after 2 hours, if we have participants in double digits, I think it is a very, very successful seminar.
I hope so. Thank you. I hope I could contribute and I could bring light to certain issues. I hope I could add value to the business.
Definitely, sir. Definitely.
Thank you.
All right. Thanks a lot. Thank you, Raj. Thank you, IRIA team. Thank you, Ishanji, for your time. Thank you, members. Thank you, everyone.
Thank you.
Thank you.
Thank you, everyone. Nice to connect with all. Thank you.